Hey guys, how's it going? All right, I want to do a quick video on oil. And what I've noticed from all these technical and analysts that I follow, they've been getting bullish on oil. I mean, there's one that is actually bearish on oil. But for the most part, you're seeing a huge change in sentiment from almost a year back. And like I told you guys before, I don't look at markets from a technical point of view. I do follow these guys, but more of a fundamental perspective. But I'm going to show you one guy who's a technical guy. I really like his work. He is Dana Lyons. His work is on StockTwits, Yahoo Finance, Twitter, and I'm going to look at the Saudi Arabian index, and you'll see why I'm looking at this. And then I'll get into oil. It says Saudi Arabian market testing post 2004 down trend line. You could see it over here. 2014, I'm going to show you right now, had the largest commercial short positions. Let's look at it right now. Okay, so June of 2014, you could look at it here. The net commercial short position, I put right over here, is minus 492,580, and that is contracts. And the commercial money tends to be right when it comes to extremes. Remember, these guys are hedgers, and if you want to look at the non-commercial, they're usually the money chasers, the hedge funds, and all that. And during price inflection points, they tend to be more wrong than right. And I'm talking about price extremes because they are just chasers. So look at this. The last commercial or commitment of traders report, which was this 3rd of January, this past Tuesday, you could see contracts and the short side, it's been the largest since 2014. And it's minus 466,764. And I want to look back at this Saudi Arabian index here. So this was, you could say like this represents more or like June to July of 2014, maybe a little after, and you could see that this index has been going down when you had the largest short position. And right now, like I mentioned before, we have a huge short position. Now, I'm not saying that just because there's a huge short position, that doesn't mean the prices are going to go down. I'm just looking at what happened in 2014. I'm looking at the Saudi Arabian price or the ETF based on what Dana Lyons provided, and I'm looking at, okay, this is one thing to note. While I see a lot of people getting excited, the technical guys, right? The guys who look at momentum. And remember what happened to these momentum guys, they got burned in 2014. The non-commercial money, the hedge funds, the money managed funds, the retailers, they got burned. And you're seeing something similar going on, like you saw in 2014, in terms of position sizing in regards to hedge funds versus the guys who are out there, the commercials who are hedging. I wanted to show you this one last graph here. And I just overlaid a chart of crude oil from 2015. And I looked at in red over here, this is the Saudi Arabian KSA index. This is the data that I could get, that I could only find. And you could see that there seems to be a correlation in the price of crude oil, right? The West Texas Intermediary crude contract, the light crude contract versus the KSA. And look at the red over here, Saudi Arabian index. You could just see, not all every day, but you could see for the most part the prices are going together. And if you go back to Dana Lyons's chart over here and compare to the commercial short position, the way that I would interpret it is that you at least will see a correction. I mean, we could go maybe. maybe $57, $58 a barrel for oil, but I would expect a decent correction. And that doesn't mean that oil is going to crash like you saw in 2014. It may just tell you right now may not be the best entry for crude oil on the long side. There will probably be better opportunities to get long. And I know these hedge fund guys, and I analyzed for the past few weeks, the short position has been getting larger and larger and larger. And you could look at even here, right? Since December 13th, and then you could go to December 20th, short positions getting larger, and then you go up here, minus 466,764 contracts for oil. So as I see all these guys getting excited about oil, I'm thinking to myself, the data says the smart money, the commercial money, is getting really net short, while the hedge funds are getting really excited about going long. And like I mentioned before, hedge funds at inflection points tend to be more wrong than right. But anyways, guys, thanks for listening, and I'll do another video shortly. Thanks. Bye.